Good morning, everybody. It is June 21st, and you're watching MarketStream.live. And this is the Overnight Action Report, where we take a look at everything in Asia. Welcome. My name is Joseph Cusick from the Cusick Group, securities offered by MoneyBlock. And this is where we check on what I think is the most underrepresented segment of investors' portfolios. I know you've heard me talk about this ad nauseum, but I'm going to reiterate this. 36% of the global GDP happens in Asia. It's produced in Asia. So while it may be highly correlated quite often with our domestic markets here in the US, so it's not really a diversification tool, we're out searching for growth. If you're looking for a bullish portfolio that's looking to take advantage of growth, hey, take a look at China. Now, China right now has a 6.2% GDP forecast. That's compared to the U.S. at basically right around 2.3%. Also, if you take a look at it, you're looking at a PE ratio. For you fundamentalists out there, the PE in China on average is about 8.3, and the S&P 500 here in the States is at 18.3 price to earnings ratio. If you're looking for value, growth, that's why we talk about Asia. So let's jump in and take a look what happened in the overnight action. The Nikkei finished down 91 points at 20,138. What's notable here is a handful of things. One is that Japan is following the U.S. A little bit of weakness. You see a bit of a pop here on the chart. And again, it's well above its 20-day moving average, but we're going to watch that 19,921 level. Challenge there means the short-term bulls in Japan are going to be in trouble. What's going to be the red flag? If you continue to see strength in the yen. The yen is a currency that is quite often looked at as a reserve currency or safety currency. When things get uncertain, they're going to go in and they're going to look at the yen. The other concern, too, in Japan is they're not seeing inflation. The inflation forecasts and the inflation anticipation that they were hoping for is not coming to fruition. This is starting to put pressure on the markets. The challenge of that green line, the 20-day moving average here on the chart, that's what you want to watch on the Nikkei. You can watch EWJ, which is an ETF that tracks the Nikkei, and you can watch the US dollar Japanese yen pair. Currently, right now, the US dollar strength, weakness, and the Japanese yen strength. This is putting a weight on the Nikkei. Japanese stocks, they might be in a little bit of trouble here. We're going to keep an eye on that, but still in a bullish trend. What is notable, though, overnight is China. China continues to chug to the upside, coming off of its lows from about 3 weeks ago. We're seeing right now that it's overtaken its 20, its 50, and now its 200-day moving average. With the settlement above 3,156, we have the bulls on parade, so to speak, in the mainland. Now, this has been the most beat-up index all of 2017. So buy on weakness, sell on strength. So you see that Japan has been strong. You're going to see that Hong Kong has been strong. You'll see India is strong. But Japan has been beat up, and that's for a lot of reasons. But one of the big catalysts right now for the bulls right in Japan or in China is that the Class A shares of Chinese stocks are now going to be included in the All-World Index, the MSCI. This is huge for Chinese large-cap stocks. And I said huge, I know. But why is that huge? It's because it's been talked about but never really triggered. This is going to allow large cap stocks to really get some potentially new investment, get some new capital. They have a growing infrastructure. They have a growing middle class. People are making more money there. You have a younger middle class than we do in the more mature United States. So with that being said, there could be some growth there on the mainland, especially if they stay close to those GDP targets. And watch that import-export ratio. The imports have been outweighing the exports for the last few reports. That's interesting action here. That could be potentially growth on the mainland. Hong Kong did finish to the downside, down 148 points. Now, this has been a swing, challenging its 20-day moving average. You can see it's on that green line. It's settled right at that green line right there, which is at 20,692. It's right above it, 94. So with that being said, you saw that mainland money was cycling in. So there's heavy financials. There's also some energy exposure in Hong Kong. And that's what really got hit overnight. With the precipitous drop of crude, both the West Texas contract here in the United States and the Brent contract that primarily comes from Asia, the Middle East, Africa, and Russia, you're seeing that Brent contract now trading in the 46 level, has in 44 level for West Texas. That's starting to weigh on the Chinese markets. Also, just watch the financial names. We'll watch those closely. Didn't see a lot of activity there for the Hong Kong markets, but the oil markets, the energy markets have been weighing on the complex. And there could be a transition back into the mainland large cap names that have been out of favor due to the fact of uncertainty with government policies that are now having a little bit more clarity. Also with being now included in the MSCI, which is the All World Index, there's going to be 222 new names in that index. That's going to comprise about 0.75% of a very large All World Index. The Sensex India pulled back down 13 points. That was nominal at best. Watch India though. India has been the darling, but it's been grinding for the last 2 months. This is an indication that they're going to need a catalyst. And if they don't find a catalyst, if we're not going to get either growth, whether it's in the information technology sector, the consulting sector, there could be some weight on this market and very few catalysts that are going to shoot it to the upside. Want to watch India very closely. All right, folks, that's it for the overnight action report. This is why we talk about it, folks. You're going to see that Asia could be a bigger part of your portfolio. Watch FXI. That's an ETF that tracks the 30 large cap stocks that are most widely looked at and held in China. Watch that one closely today. Let's see what the reaction is now that these companies are starting to be included in the MSCI. That's it for now. We'll be back taking a look at Europe at 7:45 Central Eastern and 8:45 Eastern. We'll be back on here at MarketStream. See you then.